FXBros.
What's up, people? We're back again for the week of the 21st. We are approaching the end of July and moving closer to this presidential election we got coming up, which is looking like it's going to be one of them landslide situations. Regardless of that, this is it's the first month of the third quarter. So we're approaching the end of that. We got one more week. I think that week is going to bleed into the new month. I believe so. I think this is going to go to the 20. So yeah, it's going to bleed into the new month. So we'll probably have an peak and a new string of high news, CPI interest rates, and yada yada. So let's see what the market has the potential to do and what it did. Currently, I got the 1 hour charts up. Overall, as we look from the last little bullish kind of reversal point was around the beginning of July, right around July 2nd, during London session. Once we started to create bullish momentum and bullish structure from that point, we topped out at a high and tapping into old gaps from the first of the year. So actually, it was January 2nd we had one, and January 8th. Some old gaps that we tapped into. So this is price levels we haven't seen since the first week of January. So we tapped into that and started to struggle to continue to go higher around, I guess you could say mid-July, around July 11th, going into the 14th and the 15th. Again, shout out to our sister. It was her birthday. She celebrated on the 14th, which was a setup for some nice sales, which we can see so far. One level that was, one level that kind of stood out was this large extension that we had on the 3rd that morning at 8 a.m., 9 a.m. during New York session. We had a large extension to the top, knocking out this strong resistance that we had from June 19th, also on June 26th, and around June 30th, July 1st. Those highs created a strong level of resistance. So we needed a strong bullish push to break through that strong level that we had on the 1 hour. And thus far, you see the bullish extension that was needed with volume during the London session. During the New York session, that pushed through this area with force, which created a nice gap in the market that needed to be filled, which just now got filled on Friday. So we look last week going into Thursday evening into Friday morning, that's when we finally entered and pretty much fully closed this gap. Now this gap is really much printed out according to the 4 hours. So we switch to the 4 hour time frame. You'll see how this lines up. Nonetheless, it's still a possibility for us to come, if we're going to respect this level. Excuse me. It's a possibility that we may come as low as 66.74. Currently, I'm in buys. I did add buys to this position. We had a bearish, a bullish engulfing here, ending on Friday, and Sunday started off with a nice push higher, exactly to the high of that range of that 4-hour gap from July 3rd on the 4 hour. So if I go to the 4 hour, it'll be a little bit more defined. So as you can see, we're at this low point of this wick, the high point of this wick, and then the mid range. So we drew that out with this box here, and as you can see, the 4 hour dug right into that area. And currently looking for a reason to get into buys. I mean, like I said, you already saw the bullish engulfing on the 1 hour. Currently, my algorithm in this this indicator that we created basically is showing, the way we trade engulfing candles. Of course, there's multiple situations like how you see this candle engulf these two. So we have multiple situations of engulfing, like this candle to engulf this candle. But what we look for is 2 or more red bullish or green bearish candles followed by an engulfing color change candle. And no, 100% we didn't come up with this with this, I guess, indicator, if you will. This was which we heard it. A guy created by the name of Roberto. So shout out to him. But nonetheless, that's how we look to get in the trades based on the 1 hour and the same way for the 4 hour. So as you can see, situation like this, as you can see, the indicator does print arrows under and above those certain engulfing candles. So we have 2 red bearish candles, like I said, 2 or more, followed by a bullish engulfing candle. In this scenario right here, we have 2 or more, which really we have about like 6 or 8, like 8 or 9, followed by a bearish engulfing candle. So that's when this indicator will print that arrow above or below those engulfing candles. Like I said, as you can see, the indicator did print an engulfing situation on the 4 hour, even though my charts are printing a gap and a bearish candle starting off on Sunday. So if Scully get on here, I'm gonna see if his charts on the Oanda platform is looking like that also. But nonetheless, we are in this buy, and I'll tell you exactly where we are in at. I'll put the long position on right there. And I sit down here. So that's a 1-to-1. It's a good stop loss. That's a 2-to-1. Let's do a 4-to-1. So if we do continue to reject this area, then we'll be good for buys around this range that we entered in. Like I said, from July 3rd on the 4 hour. I'll go back to the 4 hour. You see the gap right here, created by this bullish push that I said that had to fight through this heavy resistance that was lying right here at the price of, say, roughly 66.85, 86. So we had to break through that, which we did. We got a strong bullish push to the upside, and what was left behind was a nice gap that needed to be filled. As we can see, Thursday into Friday, price did fill into that. I would say about 98% fill. Um, Nonetheless, the market is starting to show signs of bearishness, even on the 4 hour and of course on the 1 hour, as we see structure starting to get developed into these time frames. Now, if we go to the daily, we don't really see true bearish structure. We just see a pullback, a nice strong pullback. Currently from April, mid-April, we've still been in a bullish structure. So as you can see through May 1st, we created that first bearish pullback that give us that first leg of our bullish structure. Then again, around May 8th, we had another bullish structure pushing higher. Then from that point, we kind of created consolidation. Market was unsure which direction it wanted to go to. We almost saw a bearish breakout here on Friday, June 7th. But the market couldn't continue, so that was a good confirmation to load up on buys around this area. As you can see, we got rejection on Friday and Thursday, May 23rd, 24th, and followed by Thursday, 29th of May and 30th of May. So we see rejection creating strong support around that area. So as market broke that price, we would want to see a continuation. That's why the daily is going to play a key part in how we trade the futures, especially how our account grows, because we get time and patience built into a whole 4 days of trading, meaning all four sessions, the Asian, London, New York, and Australia. So we get all these sessions tied into a 4 days candle, which we get to determine what's the potential next move for the coming weeks. So as we can see, as you can see how this played out, the market rejected here on these 2 days, but finally broke through and started to sell out. Well, not started to sell out, but finally broke through and closed through the support with force. So you see how the size of this bearish candle is. Like I said, when you have strong support or resistance, the candle you're looking for that you expect for the market to print is a strong body, bullish or bearish candle, whatever got to break through support or resistance. In this case, it was a support, and the candle broke through. Now we get a retrace on the next day up, followed by rejection wicks. We do get a big bullish push that enticed everybody in the buys. And you see how this wicked up all the way above the high of the swing that created this bearish close. That was this prominent big body bearish close that closed below that strong support. So the market whipped all the way up. So of course that's getting people in the buys. Then we see a return back to that price area, followed by 2 more daily rejection wicks. All that information with the failed continuation lower and the rejection wicks, that's identical to the same rejection wicks that created this strong support. That should give you indication to, it's good if you can catch at a low price point a good opportunity to start loading up on buys and put your stop loss below, the low of this zone. So all these rejection wicks, I guess we have a lowest one right here at 65.86. So even a sweet spot, if you want to go as far as 65.80 just to make it safe. But if you catching entries at 66 flat, 65.90, that ain't nothing but a 10 pip stop loss, 20 pip stop loss. But if this is true, which I said, you don't know the future, you just make an educated, if you will, maybe a guess if you want to call it that, but it's still followed with market information and news events that can help refine those predictions. So nonetheless, we get those rejection wicks at their price level, and we can also, come to the conclusion that the market must be primed to not only, you know, not have the strong intended force to continue breaking lower. This is not the low, or this is not the time for the market to start heading lower. It has more bullishness to head to. So, and we also saw that because the high that the market was struggling with as it was creating that consolidation was right below a strong weekly and 4 hour gap that we had from, like I said, January 1st and January 2nd, 2024, the beginning of this year. So the market came this high for a reason and probably still needed to continue high just to fill in that range before we continue lower, which that's exactly what happened. And all you had to do was just be patient and read the market. And like I said, you read this off the daily. So matching that knowledge up with the 4 hour is crucial. So even if we look at this support created on May 23rd and 24th, and at the end of May on the 29th and the 30th, and then that breakthrough, and then we see the continuation higher. We go to the 4 hour, we match that up. That would be here. So you see a support form, that strong support, marking these strong, big bodied, bearish candles to break through this strong support, which it did right here on June 7th during that morning. Then you see, what do you see? A bullish engulfing on the 4 hour. What do you know? So not only did you catch buys, but you caught them at the lowest opportunity. Bam. So you could catch interest right there, load up the bag at 65.90. And what was I talking about again? I was saying if you could catch a price around 65.90, 66 flat, put stops below 65.80, you'll be golden. And as you can see, that's exactly what happened. Catching buys into this range. Ultimately, we probably would have been out of this trade as it moved higher here, but ultimately the market returned and we started seeing rejection again. So what do we do? We'll calculate that, hey, the market is letting us know that it's not going to continue lower right here. They're struggling. Not only is it struggling, they had 4 opportunities to break through that area, which is struggling. And we should be continuing high. And if you see that starting to play out, you see that market starting to push higher with a 4 like this right here, this sign right here. As you see the market reject this low, and you see it struggle right here with this. You got to think about how this looked like on the lower time frame. So you see these wicks rejecting, rejection. Everything is struggling to continue lower, even with this body trying to fight below this double bottom. Imagine how that look on a 30-minute and a 1 hour. And then the market coming all the way down, failing to go lower. The same scenario with this on the daily and the 4 hour, failing to go lower with force. So this failed to go lower with force and the market continue higher. Once you see this scenario, this little breakout of this resistance right here, that's where we, and as you can see, you notice how the market will give us one more pullback because it likes the triggers after entice buyers into the market. And then we get, and where does it pull back to? Right around that price area where it broke out of. Damn it to the T. So bam, just like this scenario, when you took profit, you have another opportunity to get back in. And you probably could build even more confidence as you see the market never testing the lows or your stop loss. And ultimately, if we wait for this breakout, which the market really showing that we were heading for that this candle here around July 3rd, then you can be confident in just holding that trade for the long term, until we start to see a bearish engulfing scenario on a larger time frame, like the 4 hour and the daily, which we did get here in this range, which would probably be an area where we would have gotten out of that trade, because who knows what the market's going to do. Of course, as we see the market struggling once again to break through the initial support that was created. If you wanted to, you could still probably hop back into this at this bullish engulfing on the 4 hour and tested the high of this range. Simple as that. Even though the market could have gone higher, but that's easy money just to test the high of that range. That's the least it's going to try to do. It maybe even drop it 5 pips below just to be sure. So bam, you got the full range of that. No other strong bearish engulfings, but if we look at the daily, look at the daily gave us, or the daily did. So bam, the daily gave us that bearish engulfing. So you should be out of that scenario right then and there. And just waiting on the sidelines to see what the daily does. And as you can see, the daily continued lower. And as we was talking about this on the phone the other day, the 4 hour didn't give us an opportunity, but if we drop down to the 1 hour, just to take a glance at the ultimate lowest time frame we pretty much trade from, you will see an opportunity get created Wednesday at 6 a.m. that follow with the continuation of this bearish momentum that was getting created after we ran up since thanks to April. Yeah, April 16th. So we've been bullish since then. And now that we reached a prominent price area and zone, filled that range, especially a nice weekly range from January 8th, the market probably has maybe not enough steam to go bullish, but at least enough steam or enough level of exhaustion to to rest at these ranges and start to sell off a little bit. And like I said, it could be just an exhaustion and a potential sellout to load up on more buys. And if we look at the weekly, you can see that range. Band right here. So if we look at this bearish range right here, you'll see that ultimately, even from this point, from January, this is what we're waiting for sales. So now we can look at this as another level. So if these buys don't work out that I'm in on a lower time frame, then we would ultimately expect the market to continue low. Because not only that, respecting this bearish range that we tapped into since we've been on this bullish run from mid-April, we had a bearish engulfing on a weekly last week. So that's powerful. It's very powerful. And typically, if we look back, most weekly engulfings follow, a continuation of that direction. So if it's a bullish, the next week will tend to be a bullish candle. So with that in mind, we're gonna keep that. We're gonna keep that a little tight. We might even decrease our stop loss to about 66.73, because right now we had off 6. So yeah, maybe 66.75. We might drop it in just to be sure, because the market could be primed and ready to sell, especially based on the weekly. So we would look, based on that move, we would definitely look on the daily and the 4 hour for bearish continuation. We would expect that. Not to say I'm gonna get out of this buy or nothing, but we also have a bearish engulfing on the daily. Not really showing like one, but the indicator did print one, basically saying that the price opened and the price closed engulfed the previous candle. Like I said, it's not showing this, but that was a gap created, so I'm not really sure how to play that, but we do have a large amount of sales. So, like I said, you can look at this as a weekly rejection of this range, especially with that weekly engulfing and the daily engulfing shown on this indicator. We can expect more sales. Now, what will confirm more sales is probably we might get a bullish push that's going to create this structure point. And then from that bullish push, we might get a continuation of sales that should break this level and attack this whole structure. And ultimately, the support of 65.90, just to give a round number. So if we do create that scenario and then break through the low of 66.80 and then continue lower, the next range would be 66. What did I say? 66 on that. Yeah, or just to make it easy, 66 flat. So that would be the next target. And then ultimately we'll be out of these buys and we'll be looking for potentially looking for sales. Like I said, if this buy works out, mostly we'll take most profit off midway through, and if it's not looking like it's going to continue higher, and not only that, as a result of that, we get a bearish daily or 4-hour engulfing to continue with the trend that could be forming as we have a bullish engulfing on the weekly and daily, that we might be seeing a shift change in direction, trend change. So I'm gonna play into that also because that's a higher time frame. And if that's the case, and we get another daily bearish engulfing, and it might not be this week, it might be next week, then we can load up the boat on sales, targeting this low of 66.80 and the low of 66 flat, and ultimately going back down into this area because we never really fully filled it per se. I mean, we did with a wick, but now we want to see the market go all the way through. So, nonetheless, even after we break through that, the next low we would be targeting is 64.70. So we got a lot of movement we could trade into as we lead into the election months, and not to mention just more so of a level of normalcy of the world, being that everybody gonna be out there summer vacation vibe, and you know, back to school, back to work in that scenario. So with that being said, I think it's time to probably look at the news and see what exactly can take us into these price levels that we could be targeting. Like I said, I have a range here that I'm looking for price to fill, testing these highs ultimately, basically coming to the high of this gap or this weekly gap, and attempting to potentially predict that we fully go all the way to this 4-hour gap from the 2nd of January, meaning basically the ultimate high of the year. So we'll be patient for that, but ultimately I'm not going to keep him. And that whole bearish situation that I said about being that we coming from a bearish engulfing on a weekly and a daily, that will kind of get cut if the 4-hour breaks above this structure, which is at 67.55 area. If the 4-hour closes strong above there and continue higher, then I'm going to lean more that this pullback was a rejection. I know it don't look like that on a weekly, and really, it could easily reject and turn up. If we get a bullish engulfing on a daily, like I said, this daily does have a gap, which we have been experiencing the last 2 weeks, but we got to look at it as, open and close. Something we may not see physically, but it's priced in. So we might see a bullish engulfing on a daily, but the weekly, that one won't be a bullish engulfing just yet. Because, like I said, with our strategy, we need 2 or more, any type of time frame, bearish candles followed by a bullish engulfing for it to be a bullish engulfing scenario on any time frame. And as far as the weekly goes, if this scenario was to play out, we would need another bearish weekly candle, then followed by a bullish. Now, I could easily say that if the bears are still in control, ultimately we can come as low as filling this gap that we have on a weekly from, it looks like that's the first gap too. I think that's where that shit started at. Yeah, right here. So that might be what it's doing. It's trying to fill in that gap on the weekly, the initial. So nonetheless, if it does that, cool, which is the price level of 66.70. So I'm going to mark that on the weekly. I'm going to notate that. All right, that. Open of first weekly gap open. Put that for to see so everybody will know we had a gap. So we're gonna see how the market reacts to that on a weekly. Because we might be expecting the market to dip down into that as far as the body, and we might get a weekly close right, who knows. Then the scenario would be nice for us to follow that with a bullish engulfing on a weekly, also following by probably previous bullish engulfings on the daily and 4 hour, which would lead us into the our confirmation of thinking that next week, following after this week, this current week, would be a bullish weekly candle, and not only a bullish weekly candle, but an engulfing weekly candle. If we are going to continue with the story that the market is coming down to fill this initial weekly gap with a body, not a wick, because I'm not going to say this did it because this is what created the gap. So I can't really call that as a gap fill because that's what created the gap, type shit. This candle. So I would think the market would want to trade back into that with more price, future price to fill in this weekly gap, which I say right now is at 66, 60. So let's look at the close of this week. We're at 66.69, and right now we're at 66.69. So bam, we good. So we'll monitor that and see how the market reacts to that if it does react. And we'll see how that looks like on a daily. This is that gap scenario right here. Let me see. Sunday, Monday. So the market didn't open here and trade low. Kind of had that gap up to this area, but we're gonna monitor that and see how the market reacts to this area. And really, I didn't plan on putting my stop loss below here, but it's kind of sweet that it is. Like I was going out that 4 hour or that 1 hour structure point, but it's funny how everything aligns. Like it's kind of this stop loss is right below this kind of gap scenario. So that's crazy. So that's what we are. We're just going to monitor this week and see how the news play out. So let's actually go to that. See what we got. Alrighty, so looks like we have no news today or tomorrow. Next level of news is coming out on Tuesday on the 23rd. We have existing home sales for for USD at 9 a.m. followed by 6 p.m. Australian dollar, Judo Bank Manufacturing and Judo Bank Services PMI. Wednesday, we have goods trade balance, S&P Global Manufacturing, Global Services, new home sales, month. Those news events are coming out at 7:30, 8:45, and 9 a.m. A lot of Euro news coming out. Nothing's crazy big for Wednesday morning, like early in the morning for London. Following to Thursday, jobless claims, continual jobless claims. We got durable goods orders coming out, all coming out at 7:30. Exempt transportation and exempt defense for durable goods orders. So I'm seeing what those orders are looking like. GDP growth rate, quarter over quarter, is coming out. If I look at the last quarter, quarter two. Currently, the consensus is at 2% from a previous of 1.4. So we're looking at a 0.6% raise. They're looking to get. All that's coming out at 7:30 on Thursday. Friday, we do have a European unemployment rate coming out. We're in the year session at 2 a.m. I'm going to get into that. Friday morning, personal income for the USD, personal spending for PCE, month over month, year over year, and Michigan consumer sentiment coming out at 7:30 for the first news events and 9 a.m. for the Michigan consumer sentiment. So, bam. Not too bad for a week of trading. I think it's going to be a nice, smooth scenario. Nothing crazy. It's going to stand out, especially with the fact that it will have no news events until Tuesday. So, yeah, we should see normal trading, normal algorithmic play in the markets. And if anything, I think Thursday is going to be a nice scenario for some kind of pullback, which it always is, especially on the USD pairs. And other than that, probably be the end of the week that I have the most pressure. If not, the home sales could. And that's a strong could because it's coming out at 9 a.m. Where our markets kind of, I ain't gonna say lose their steam, but that's kind of like the peak. So it already did what it did. Those news events that come out at 7:30, 8:30, 9 a.m. kind of hold them on my weight. Or in that order, hold my weight. Get to the 9 and 10s. But this might be good. It's 9 a.m. This might be okay. Like this NYC to 8 a.m. So that might be okay. We'll see how that does on Tuesday. That might be okay. Market is still selling off. Do have a bullish engulfing here. A nice little gap that started Sunday off right here. It's not about much. And the market has yet to fill it. So we could go off of this structure. And just to be on the safe side, I think we might do that. I don't want the market to put that low. If I got in at 90, I think 80 is too tight. I think 75 is sweet. We're gonna do that. I like that better. That way we're not playing with all that. Because if it gets this low, one, I want to be out the market. I don't want to lose that much money. Two, if it gets this low, it's another potential scenario that could be set up for a bullish engulfing on the 1 hour, for sure, probably the 4 hour, maybe the daily, if depending on how much price action we get throughout this day. Because, like I said, this is the 1 hour, so we need actually 24 candles to create a daily scenario. So we'll probably get it on the 1 hour and the 4 hour more so than anything. And with that being said, I can be patient and wait on the sideline to probably catch buys maybe below this area. So we look at the 1 hour, probably below the structured area. And we'll define it, it'll probably be right up in here. So let's draw that up and see if we can get a scenario. Let's do this. So we get maybe the market can drop this low. Let's see, we'll probably load up on buys there. If we continue to get an extension lower, that'll be the next area to load up on buys. So we'll wait for the market to swing this leg of bullishness, especially the strongest leg that pushed out through this old resistance. So this is that bullish leg that created this volume. So we want to see if the market is going to take that out, and also potentially not only take that out, but dip into this gap that hadn't been touched or fully filled. So if this trade scenario don't work out, we want to be out early. And if it continues to get lower, we'll probably definitely just go ahead and get out, because that may mean that the market is looking to dig deeper into sales before we buy back up. Let's look at the 4 hour, and then we'll look at the DXY too. Let's see what that's looking like. Check all this out. Where's the other range at? Yeah, right up in there. So we got a level down here. If this don't hold, come down here. So the DXY looking like. For this scenario to go higher, we need the DXY to sell out. So right now, the DXY does have a lot of clean traffic. Let's see if this same scenario plays on the trend simultaneously. Okay, if we do, which we do have a weird bullish engulfing, if this bullishness plays out, we can feel the clean traffic we have on the 4 hour, which is structured. As you can see, the bearish structure. But this last leg does have a lot of clean traffic. Are we coming from a high, or better yet, on the DXY, are we coming from a low point with bullish structure that we now need to turn into bearishness so the Australian dollar can go higher? So we're looking for a low with bullish structure. DXY, we have a low, but not so much the bullish structure just yet. So maybe the market on the DXY is looking to build that bullish structure, and the best way to do that is we need to create pullbacks and retests. So the market can extend higher, pull back about 50%, and then continue higher. Pull back about 50%, continue higher. Sometimes it ain't always 50%, but I'm just giving this, just explanation. And those levels of pullbacks will be areas where we look to add positions, especially once we get that bullish continuation confirmation in the form of in the form of a candlestick pattern. So we will monitor that. If we start to see the market sell out, then that means that Australian dollar will continue higher. And right now, I got a big, stupid ass consolidation going on in this, as you can see right here. Since we dropped off, market ain't really did too much of nothing. I mean, we kind of had this continuation lower, but nonetheless, we've been just kind of ranging on the larger scale of things. And it was confirmed that the market broke out lower here and pushed back into the range, created a high. So thus far now we created a range within a range. and we're looking for another breakout. Currently, we have a potential situation where we could break our lower, which would be sweet for us because that would give us more bullishness on the daily, on the Australian dollar. So if we get a continuation lower, just like how we have here, that's on there. As you can see, we have support here. And the market broke out lower, and now we're back into this consolidation range. If you look at this as a consolidation range, market broke out here. Being that we couldn't break above a leg, a bearish structural leg, it could be a possibility that we can continue lower. Like I said, that's for creating a bullish scenario on the Australian dollar, and followed by, just that continuation higher. And probably ultimately, all we need is the Australian dollar to fill in the gap up here for this 4 hour on the 2nd of January. That'll pretty much put us back to the highs of the year. If we go higher, cool. If not, that'll be a nice area to load up on, nice sweet sales to maybe continue the sale for the rest of the year. Thus, for creating somewhat of a consolidation. If you look at it on a larger time frame, daily. So we got a high here at the beginning of the year. Actually, right around here at the beginning of the year. So right there, market has a low, slight consolidation, fake out, break back higher, potentially to that same price. So right now, if we get rejection from this high and start to have a deep sell, kind of similar to what we're experiencing now, but maybe even more of a defined and more of an aggressive sell, then this would be the completion of a consolidated market. And if we do get that strong rejection, the only thing that would kill this consolidation from even having more harder confirmation if the market continue higher. Like tap into this high, like if the market pulls up, taps into this high, continues lower, and then pushes higher, then this is an invalid type of scenario for a consolidation. Other than that, if we reject these highs, meaning ultimately filling in this gap in the 4 hour right here from the 2nd of January of this year, then it would be nice to load up on sales right here. Like I said, if not the scenario, we got another range right here. So February 14th, 2023, we got another price level. And the market could wick that high. Even after we come up to these levels, the market could pop up and wick this high. So we got a whole lot of scenarios at play, but we know exactly where we need to be entering, exiting, and whatnot, based on these levels. You just got to be patient enough and wait for that to play out. Simple as that. We got some of these jumpy pairs. Nothing just yet. The market is starting to create bearishness, but we haven't really tapped into that level until we break the level of 154.90. GJ daily, kind of the same scenario. We do have a bearish engulfing, but we are creating somewhat of a weak little leg with this bearish scenario. We have a lot of clean traffic to the left on the GJ, so for it to be a bearish market, for us to even really start to having that conversation, we need to ultimately, I would say, break 198, break below that. AJ, same scenario, kind of a lot of clean traffic to the left, but we already pretty much filled it. So if we're going to continue lower, the next level to confirm this bearish market would be 103, 103.16, 103 flat, I guess would be the next one on AJ. Right now, not sure what the market is going to do, but we ready for whatever. EJ, Pretty much same scenario. Market is more of a defined bearish structure, especially with these engulfing scenarios. So, like I said, if you in sales, great. The targets for this one would be 168, 39, around that area. So, great if you're still in sales for EJ, also AJ, also GJ, and also UJ if you caught those sales on a daily engulfing. Like I said, higher time frame engulfings are powerful. Let's look at the weekly. Weekly engulfings. UJ, GJ no, AJ yes, EJ yes. So then weekly and daily engulfings. Which probably garnered, I think, especially if you got in on the daily engulfing. Let's see if it's a 4 hour. These pairs move. Probably would have got a nice sweet battery, 400-500 pips. So this one did show us bearishness, but like I said, that was a news release. You would have had to really catch that. Like I said, that was that morning. So the candle didn't open for news, but around at 8 a.m., I think 9 a.m., I think it was a heavy news release that made the market react this way. So not a lot of room to get in. No bearish engulfing until the initial leg on the 4 hour on AJ. Friday morning. Wait for that. EJ, same scenario. Couldn't catch that first leg of sales because it was just too pronounced. Even if you wait for the close, the market moved too heavily. So you had to wait for the pullback, followed by another 4 hour bearish engulfing. If you had that, you definitely ate well into the, looks like 300 pips for sure. And that was EJ. So, yeah. Being patient pays, man. Daily engulfings, weekly engulfings, 4 hours, 1 hour for entries, tester entries, just to be sure. So, yeah, man. This market is a beautiful thing. It's looking like we're about to get stopped out soon, which is cool. I'm expecting that because the next scenario would be the market coming down to this level. So, yeah, we're shooting past this, so I'm going to get out of that completely. Close that buy and then wait for another setup, which I believe now the market is kind of coming to this area, and then we'll look to see if we get some signs of rejection on the 4 hour and the 1 hour for a bullish engulfing, and then we can potentially hop into buys there. So bam, there you go. But yeah, other than that, we are free and clear for heavy volume from news until Tuesday morning. I think the market probably not gonna have a strong reaction until later on in the week around Thursday. So we'll just monitor it accordingly and we'll keep everybody updated if we see any crazy opportunities in the Telegram. Until then, we'll be back next Sunday, man. Y'all, peace out.